It always starts with one trade. One mistake. One red candle that wipes away hours, days, or even weeks of hard work. You stare at the screen, your palms are sweaty, your heart is pounding. You whisper to yourself, "I'll get it back, just one more trade." That, right there, is the beginning of a revenge trade. It's not just a bad trade. It's a psychological war, a war between your ego and your logic, between your pain and your discipline. And for many traders, it's the war they don't even know they're fighting. In this video, we're going to go deep into the psychology of revenge trading. Why it happens. What it does to your mind. How it destroys accounts. And how to break free from it forever. This is not just about charts. This is about your mind. The psychology behind revenge trades. Chapter 1: The emotional explosion after a loss. Losses in trading aren't just numbers on a screen. They're emotional earthquakes. When a trade goes against you, your brain doesn't say, "That's just a 2% loss." Your brain says, "Something is threatening me." You feel your chest tighten. Your heart speeds up. Your palms sweat. That's fight or flight mode, a primal survival response. In those moments, logic isn't in charge. The amygdala, the emotional center of the brain, takes over. And when emotion takes the wheel, discipline gets thrown out the window. Revenge trading is born in this moment. Not in the chart. In your emotional reaction to loss. Chapter 2: The Ego Trap. I'll win it back. The biggest lie every revenge trader tells themselves is simple. I'll win it back. It sounds logical, but it's pure ego. Ego can't stand being wrong. Ego can't accept defeat. Ego wants the market to apologize. But here's the truth. The market doesn't owe you anything. It doesn't care about your feelings, your plans, or your last red trade. It moves how it wants. Revenge trading isn't about getting the money back. It's about proving something to yourself. That you're still smart. Still in control. Still right. But in chasing that illusion of control, you lose the only real control you ever had, your discipline. Chapter 3: The Brain Chemistry of Revenge. Here's something most traders don't realize. Revenge trading is chemically addictive. When you lose, your dopamine, your brain's reward chemical, crashes. You feel pain, frustration, even shame. And your brain looks for a way to fix it, fast. Placing another trade gives a dopamine spike. It gives your brain a temporary high, a sense of hope. It doesn't matter if the setup is trash, your mind just wants to feel that rush again. This is why so many traders click buy or sell again within seconds. It's not strategy. It's addiction. It's no different from a gambler doubling down after a loss. And just like a gambler, they don't see the trap until it's too late. Chapter 4: The Revenge Trading Cycle. Revenge trading follows a deadly pattern. 1. A loss triggers frustration. 2. Frustration triggers impulsive trades. 3. Impulsive trades trigger more losses. 4. Those losses trigger regret, and more frustration. And the cycle spins faster and faster. This loop can blow an account in minutes. Not because the market is cruel, but because the trader was fighting an enemy inside their own head. Some traders spend years stuck in this cycle. Some quit forever because of it. Others learn to master their emotions and break free. Chapter 5: Loss Aversion, the Hidden Force. There's a powerful psychological principle at play here. It's called loss aversion. Human beings hate losing twice as much as they enjoy winning. Losing $100 feels worse than winning $100 feels good. When traders lose, they'll do anything to erase that pain. That's why they jump into the next trade too soon. Not to make a smart decision, but to make the pain stop. This is why revenge trades are rarely well thought out. They're emotional bandages on a bleeding wound. Chapter 6: Overconfidence Bias. Another psychological enemy is overconfidence. After a loss, many traders say to themselves, "I won so many times before. I can't lose again." That mindset leads them to risk more, to trade bigger size, to throw away their plan. But overconfidence is silent and deadly. It blinds you to risk. It whispers lies to your brain, making you believe you're immune to the market's randomness. Revenge trades often happen when confidence crosses the line into arrogance. Part 2. The psychology behind revenge trades. Chapter 7. The battle between logic and emotion. Every trader has two sides. One is logical, patient, analytical. The other is emotional, impulsive, and desperate for control. When you're calm, logic runs the show. You follow your plan. You manage your risk. But the moment you take a loss, emotion grabs the steering wheel. Revenge trades happen when emotion wins the battle. You stop thinking about probability and start thinking about payback. You stop asking, "What's the setup?" and start saying, "I'll show the market." The truth? Every revenge trade is a silent declaration of war against yourself. Chapter 8. Confirmation bias, seeing what you want. After a loss, traders don't look for truth, they look for validation. You start seeing patterns that aren't there. A small bounce suddenly looks like a reversal. A random candle becomes your signal. That's confirmation bias, your brain filtering reality to support your emotions. It's like wearing tinted glasses, everything you see is colored by what you want to believe. Revenge traders don't analyze markets, they justify bad decisions. Chapter 9. The emotional rollercoaster. Revenge trading isn't one emotion. It's a storm of emotions colliding all at once: frustration, anger, fear, shame. One moment, you're hopeful. The next, you're terrified. Then you feel regret, guilt, and the cycle repeats. You check the chart every second. You can't sleep. You replay the loss in your mind, over and over again. That emotional volatility kills more trading accounts than bad strategies ever will. Chapter 10. Identity and ego, the hidden drivers. Most traders don't realize how much their identity is tied to their performance. They don't just lose money, they lose a piece of their self-worth. You tell yourself, "I'm a smart person. I can't be wrong." But the market doesn't care about your intelligence. It only rewards patience and risk control. When your identity is built on being right, every loss feels like an attack on who you are. That's why revenge trades feel so personal. You're not trying to fix your account, you're trying to fix your ego. Chapter 11. The cost of emotional decisions. Every revenge trade has a hidden price. The first cost is financial, your account balance takes the hit. But the deeper cost is psychological. You lose trust in yourself. You stop believing in your system. You start doubting your instincts, even when they're right. This internal doubt creates hesitation, and hesitation creates missed opportunities. Eventually, you stop trading your plan altogether. You're just reacting, not thinking. That's the real tragedy of revenge trading. It doesn't just take your money. It takes your confidence. Chapter 12. Awareness, the first step to freedom. You can't fix what you don't recognize. Awareness is the first step out of the revenge trap. The moment you feel the urge to get it back, stop. Don't open a chart. Don't touch the mouse. Just breathe. Write down what you're feeling: anger, frustration, embarrassment. Labeling emotions reduces their power. It brings logic back online. In that small pause, between impulse and action, lies your freedom. Chapter 13. Emotional journaling, the trader's mirror. Most traders track entries and exits. Few track emotions. And that's the difference between amateurs and professionals. An emotional journal doesn't ask, "What did I trade?" It asks, "What did I feel, and why?" When you document your triggers, patterns appear. You'll notice, every time you skip breakfast, you overtrade. Every time you lose 2 trades in a row, you go full revenge mode. Awareness isn't sexy. but it's what separates emotional traders from consistent ones. Chapter 14: System over Emotion. Professional traders don't trust their feelings. They trust their system. A trading plan isn't just about entries and exits, it's a psychological anchor. It tells you when to walk away. It reminds you that one trade means nothing in the long game. When your system is clear, you don't need to win it back. You simply follow the rules. That's how professionals protect themselves from emotional chaos. Chapter 15: The Power of Routine. Routines create safety. They replace emotional reaction with structure. Wake up at the same time. Analyze your charts at the same time. Take breaks, even when you don't want to. When your day is structured, you reduce uncertainty. And uncertainty is the fuel that feeds emotional trading. Consistency in behavior creates consistency in results. Chapter 16: The Mental Reset. Every trader needs a reset button, a ritual that signals it's time to stop trading and recover emotionally. For some, it's taking a walk. For others, meditation, journaling, or even exercise. When you hit that emotional boiling point, step away. The goal is not to make money, it's to protect your state of mind. You can always make another trade tomorrow. But you can't rebuild your psychology overnight. Chapter 17: The Neuroscience of Trading Decisions. Every trade you take begins in your brain, not your chart. The decision to enter, hold, or exit is made by two main players: the prefrontal cortex and the amygdala. The prefrontal cortex is your logic center. It handles analysis, patience, and planning. The amygdala is your emotional alarm. It reacts to fear, greed, and stress. When you're calm, the prefrontal cortex runs the show. But the moment you take a painful loss, the amygdala hijacks control. It screams, "Do something." Even if that's something that destroys your account. This is why revenge trades feel irresistible. You're not making a choice, you're reacting to a chemical signal of distress. Chapter 18: How the Brain Learns from Pain. Pain is your brain's most powerful teacher. But in trading, most people don't listen, they react. When you lose money, your brain creates an emotional memory. It wants to avoid that pain in the future. But instead of reflection, most traders jump into another trade, which only reinforces the pain loop. True learning comes when you pause. When you analyze not just the loss, but your reaction to it. That's how you rewire your brain from emotional trading to strategic thinking. Chapter 19: Training the Prefrontal Cortex. The prefrontal cortex, your logic center, can be trained like a muscle. Every time you resist an impulsive trade, you strengthen it. Meditation, journaling, deep breathing, these are not spiritual gimmicks. They're neurological training tools. They lower emotional arousal and keep the logical brain in control. 10 minutes of mindfulness a day can reduce emotional reactivity dramatically. Over time, that calm becomes your edge, the edge most traders never develop. Chapter 20: The Myth of Control. Revenge trading thrives on the illusion of control. You think, if I trade again, I can fix this. But the market is chaos. You control nothing, except your actions. The best traders don't try to control the market. They control their behavior within the market. When you finally accept that, something magical happens. Losses no longer feel personal. They're just part of the game. Chapter 21: Detachment, the Secret of Professionals. Professional traders are emotionally detached. They don't celebrate wins or mourn losses. Every trade is just another probability, another data point. Detachment isn't coldness. It's clarity. It's the ability to act without emotional noise. When you stop chasing outcomes, you start executing with consistency. And consistency is the bridge between losing traders and profitable ones. Chapter 22: The Burnout Effect. Revenge trading doesn't just empty your account, it drains your mind. Constant adrenaline and cortisol from stress create fatigue, irritability, and even depression. you start forcing trades not out of strategy but out of emotional exhaustion. That's why rest is not optional. It's part of your trading edge. Rest restores your decision-making power, your emotional capital. You can refill your trading account. But once you drain your mental capital, recovery takes much longer. Chapter 23: Process over Profit. The most successful traders don't focus on making money. They focus on executing the process perfectly. When you measure success by profit, emotions rule. When you measure success by discipline, consistency rules. Revenge trading can't exist when your goal is process perfection. Because you stop chasing results, you chase precision. That's how professional traders stay calm even after a big loss. They know their process will protect them in the long run. Chapter 24: Creating Emotional Distance from Money. Money isn't just currency, it's emotion. It represents freedom, pride, and security. When you trade, you're not just risking capital, you're risking emotion. That's why losses hurt so deeply. To overcome revenge trading, you must detach from money as identity. See it as a tool, not a reflection of self-worth. A true professional doesn't say, "I lost $500. They say, "The system produced a drawdown." That small shift changes everything. Chapter 25: The Power of Self-Observation. Imagine watching yourself trade from the outside. No emotion, just observation. You'd see patterns you never noticed before. Self-observation creates separation between you and your impulses. It turns emotional chaos into clarity. The more you observe without reacting, the stronger your discipline becomes. That's how you evolve from trader to strategist. Chapter 26: The Turning Point. Every trader has a breaking point. That one final revenge trade that empties their account or shatters their confidence. But that breaking point can become the turning point. If you learn from it, it becomes your greatest teacher. The pain that broke you can be the same pain that builds you. If you decide to never let emotion control you again. Chapter 27: Recovery and Rebuilding. After a revenge trade blow-up, recovery starts not with a new strategy, but with a new mindset. Forgive yourself. Accept the loss as tuition paid to the market. Then rebuild with humility. Start small. Trade less. Focus on rebuilding confidence, not capital. Every small win restores your emotional stability. The goal isn't to bounce back fast, it's to come back stronger. Chapter 28: How Professionals Handle Loss. Pro traders don't avoid losses, they manage them. They know losses are part of the job. They size positions accordingly. They stop trading when emotional energy drops. Some traders have rules like 2 losses in a row, step away. 1 emotional reaction, take a break. Never trade to get it back. That's how they protect not just their money, but their mindset. Chapter 29: Transforming Revenge into Reflection. You can't eliminate emotion, but you can transform it. When you feel that anger rising after a loss, pause and ask, what is this teaching me? Every revenge impulse carries information about your fears, your ego, your weaknesses. Use that energy not to trade, but to learn. Let emotion become your compass, not your enemy. Chapter 30: Emotional Mastery begins with acceptance. The first step to mastering emotion is not control. It is acceptance. You cannot control an emotion you refuse to feel. You cannot heal pain you deny exists. When you lose a trade, accept the wave of frustration. Let it rise. Let it fall. Only then does logic return. Emotional mastery is not being calm all the time. It is becoming calm faster. The quicker you recover from an emotional spike, the more power you gain over every decision. Chapter 31: Rewiring the Mind of a Trader. Your mind was built for survival, not for markets. In the wild, loss means danger. But in trading, that same instinct destroys you. Rewiring the mind means teaching it new rules. Loss does not mean danger. Loss means information. Each time you reflect instead of react, you rewrite the code of your brain. You teach it that calm is safety, and patience is profit. Repeat this long enough, and what once felt impossible, staying composed in chaos, becomes effortless. Chapter 32: Building the Trader's Mindset. A real trader thinks long-term. They do not measure success by a single position, but by thousands of disciplined decisions. They focus on probabilities, not emotions. They seek growth, not revenge. Every elite trader shares one trait: detachment. They can lose today and trade tomorrow, as if nothing happened. Because they understand, no single trade defines them. Discipline does. Chapter 33: The Power of Patience. Patience is the rarest edge. In a world that craves instant results, the market rewards the opposite. Every impatient trade carries hidden risk. Every forced entry is a step toward emotional ruin. True patience is not passive. It is waiting with intention. Knowing opportunity never vanishes, it cycles. The one who waits always beats the one who chases. Chapter 34: The Discipline Engine. Discipline is not motivation. Motivation fades, discipline endures. The disciplined trader follows the plan, even when it hurts. They shut the platform when rules say stop. They guard capital like oxygen. One undisciplined moment can erase weeks of precision. Discipline is the silent edge no indicator can show. Chapter 35: The 3-Minute Rule. When the urge for a revenge trade strikes, pause. 3 minutes. Stand up. Breathe. Walk away. Those 3 minutes break the emotional circuit. Logic returns as the impulse fades. If after 3 minutes the setup still stands, take it calmly. If not, you just saved yourself from another spiral. A simple rule, a massive difference. Chapter 36: Reframing Losses. A loss is not punishment. It is tuition. The market is an expensive teacher, but the most honest one you'll ever meet. After each loss, ask, what did it teach me, technical, emotional, or strategic? Every lesson learned once is cheaper than a mistake repeated twice. When you see losses as lessons, revenge becomes pointless. Learning becomes victory. Chapter 37: Shift from outcome to process. Control what you can. You can't command price action, but you can command risk. You can't control the market, but you can control your response. Process-focused traders don't ask, did I win? They ask, did I follow my plan? When success means adherence to process, every trade, win or loss, moves you forward. Chapter 38: The Power of Stillness. Stillness is a hidden weapon. In chaos, it keeps vision clear. While crowds panic, you observe. Markets move fast, your mind doesn't have to. Stillness creates space for reason to breathe. Within that space, decisions sharpen. Chapter 39: The Professional Code. Professionals live by 3 pillars. Protect capital. Protect mindset. Execute the plan. Trading is not therapy or adrenaline. It is business. Every click carries cost. Every emotion leaves residue. Pros act like operators, not gamblers. They aim not to be right today, but to survive and thrive tomorrow. Chapter 40: Quiet Confidence. True confidence whispers. It doesn't celebrate wins or curse losses. It grows from repetition, reflection, and restraint. The confident trader waits. They let the market come to them. Confidence built on luck is fragile. Confidence built on discipline is unbreakable. Chapter 41: The Evolution of a Trader. At first, you trade for money. Then, to prove something. Eventually, you trade to understand yourself. You realize the market isn't an enemy, it's a mirror. Each loss reveals weakness. Each win tests humility. Trading becomes less about profit and more about personal evolution. Chapter 42: Turning Pain into Power. Pain is not the end. It is transformation. The energy once driving anger can drive focus. The intensity that fueled overtrading can fuel mastery. Pain understood becomes strength. Strength discipline becomes wisdom. Chapter 43: The Final Lesson. Revenge trading is not about charts. It is about conflict within. It's never the market you fight. It's yourself. You can memorize patterns and strategies. But until you master emotion, one click can undo it all. Once awareness replaces impulse, you move with the market, not against it. You work with emotion, not under it. That is true mastery. Chapter 44: Freedom Through Discipline. Discipline is not a cage, it is freedom. Freedom from fear. Freedom from reaction. Freedom from revenge. Every pause before a trade is a victory. Every controlled loss is progress. Every calm exit is power. The market will test you endlessly. But calm inside chaos is your superpower. When the next loss hits, don't chase it. Understand it. The trader who understands never needs revenge. The market isn't your opponent. It's your teacher. Learn. Adapt. Rise. Understanding the mind is the first step to mastering the market. If you found value in this message, support this channel with a like and subscribe for more lessons on trading psychology, discipline, and the mindset of true traders.